We are all controlled by an invisible force that has impacts on every aspect of our lives that the vast majority, 99% of Americans, do not see nor understand. I am going to walk through and show you how this, the main issue facing America, affects you every single day. I'm going to walk through something that seems complex or way too big, and I am going to help you understand it in a real, functional, applicable way. What is it? Debt. Government debt. Now, before you turn off and be like, yeah, I get it, government debt is way too much and not a problem, do you really understand how it affects you, especially when it comes to buying things, using your credit card, getting a 30-year mortgage, and what that means for your job and your business and complexities within the economy? Most people, they can't figure out the connection. Let me help you. Part of the problem is that it is so big. In fact, it's so big that most of us just turn off. We don't understand it. We can't even conceptualize this big of a problem. That problem is the US added $12 trillion in debt since 2020. To put that in perspective, we can go all the way back from 1800 to 2020, and it took 221 years for the total US debt to reach $12 trillion. This entire history was done just since 2020. The problem that was already a big problem blew up. Like wildfire, it spread uncontrollably. Now, most people, they see that and they hear it and they hear everybody saying, this is a problem, it's too much. But they really don't understand why. They don't understand how it's affecting or what it's doing to the economy. So right here we have the federal government and their workforce, which is employed and paid for by taxpayers. All of these states, roughly 34 of them, have a workforce that is less than the federal government. Now, it's also important to know that all of these states balanced their budgets, in fact, had a surplus. But the federal government alone on workforce is the largest employer in the United States. The economy is predicated on the US government at this point. It's created two different realities that was no more evident in the latest election. Because on one hand, we see numbers like, oh, the workforce is growing and the GDP is growing. The problem was, in 2024, almost 50% of all new hires, those new employed, were from the government. That was in our workforce numbers. Now, the other problem is, almost 50% of the total GDP was government expenditures. When you start taking those things out, the economy doesn't look so good. As in, the economy has become more and more the US government. And it takes a lot of money to fund that kind of growth. But it's not just money. So we're walking through the problem. I'm going to walk through how it works and then detail how it affects you. Now, as far as administration of the public, the economy, and other aspects of our lives that it takes just for a country to function, we need a government to obviously set regulations and do all of those things that we all need. The problem becomes is how it's administered, especially the changes in America. You see, after the 1960s, America had a hard time creating regulations as well as making sure people abided by them through the administration that it currently had. We had rules called the Chevron laws. And effectively what had happened was we began to rule by departments. So the federal government had administrations as well as departments actually create the regulation and the enforcement of it. They did this on a practical standpoint to simply help administer it. Well, this grew and grew and grew. where, as departments went, it got further away from our elected officials, and they began to create regulations and enforce them, completely separate from those that were voted in by its citizens. This became its own beast that was self-perpetuating. Now, this added lots of complexity. How much? Well, you can see, since the early 1960s, the amount of total code of federal regulations that were published. It exploded after this point. Now, complexity doesn't necessarily mean it's a bad thing, but when applied, especially due to regulation in an ever-changing landscape, it can be astronomically detrimental. We can see how complexity can completely destroy industries in reducing the overall benefit while increasing the cost by looking at just one industry alone. Healthcare in the United States is pretty dysfunctional. Everyone knows that. The complexity is wild. Now, the interesting thing is that overall, healthcare, if you can get access and afford to it, the results are good. But trying to get the access to it is very difficult. We can see that since the 1970s, administration growth for healthcare systems has gone up so far disproportionately compared to physician growth. As in, hospitals today are basically, and healthcare in general, massive administrative organizations, with the resources being poured into outcome are relatively small. And we can see how that has affected the United States. When we go back, take a look. 1970 to 1975, just like we saw in that chart, as it started to grow, the United States actually kept up with all other countries. But by 1975, right when we saw a very large spike, so if you remember, right here we go into the 80s, right before the 90s it began to take off. That is this period right here, right before healthcare dramatically changed in the United States. And we can see it cost much, much more, even though our life expectancy has not kept up with the other countries. Basically, in the United States, healthcare has gotten more expensive, yet we have not seen the same benefit. This follows exactly how much administration had been built up and spent over outcome, which makes sense. The administrative levels that we all have to pay for are not tied to outcome. This actually makes it more difficult for people to get access. So why the output is good if you can afford it and if you can navigate it, that's great. If you can't though, you don't get those benefits. So the system stops working for the people it's trying to serve. Another perfect example of this is within the school system. Once the U.S. Department of Education, based in Washington, D.C., a federal organization, got involved, we saw an explosion from 1950 to 2009 in administration and other staff. Over a 700% increase, while students only grew not even 100%. Teachers only grew by 252%. Administration and other staff wildly outpaced the growth of students and teachers. Once again, separating the machine from the outcome or the people that it serves. Now, these are just a couple of examples, not stating bad or good, but definitely to show how outcomes are affected by complexity. This is seen in all sorts of areas within the federal government, like the tax code. You can see how the complexity of tax code has skyrocketed, which has in turn made all sorts of things like loopholes, as we say it, which aren't actually loopholes, they're just tax code. Less than 10% of the tax code has anything to do with paying taxes. Everything else is how not to pay taxes. But that complexity then makes it difficult for the average person, unless you can afford it, to take advantage of it. That complexity goes even further, and we can look at things like is called IRS welfare. What really that means is simply when you look at, in the terms of billions of dollars, how much of this is either given back or refunded to its citizens. So we have child tax credits, refundable credits for income tax offsets, and refundable credits of welfare payments. This is how much money that the government is giving off taxes every single year. It's a massive sum of money that once again we saw increase dramatically right when 1990s on we saw an explosion of what has been deemed as IRS welfare. Now, this complexity is meant to do something good. It is meant to try to change behaviors. One of the problems, though, you have with government, as new regulation is created, old regulation doesn't go away. So this is a dual problem that we have that's going to affect you. And now we're going to get into how this affects you day to day. And I'm not talking about regulation and what goes into it. I'm actually talking about why buying a house may get harder and why using your credit card may not be as beneficial. Because the size of the debt has gotten so big. So let's talk about it. Right now, financing for real estate is really hard, even for self-storage. The markets are very challenging. Live Oak Bank is a specialist in financing for self-storage, including SBA loans. They are one of the leaders in financing all sorts of deals and deal size. We trust Live Oak Bank for their specialty in self-storage, their unique approach, and how they help their customers go through the process so there's no surprises. That in itself is a testament to their exceptional service and support. So whether you're looking to acquire, build, or expand a storage facility, Live Oak Bank has to be number one on your list to call. Click the link below right now so you can experience the difference that a dedicated self-storage partner can really make. How does this affect you day to day? Most people do not even realize how it is that the government gets debt. This ginormous spike in trillions and trillions of dollars in debt, where does it come from? How do we get it? Well, the first thing is the government sells off IOUs that are promised and backed by the United States taxpayer. These are called bonds, and the bonds are sold to raise money to pay the government. When the government borrows a lot, like in times like this, it increases the total pool or amount of bonds on the market. They need more money, so they have to sell more bonds or IOUs. They are increasing the supply of bonds on the market. And the government's not the only ones that issue bonds. The private sector does this too. But when you increase the overall supply, demand may not keep up with it. And if there's not demand to keep up with it, they actually have to raise interest rates. Why? Because you need more people to buy them. And interest rates is how you pay those investors. So when you increase the supply, it's not keeping up with demand because there's not that many people that want to buy them. So interest rates have to go up, so you'll entice more people to buy them. High borrowing increases chances of things like inflation. That's right, we saw that. Meaning that the more money the government is borrowing, remember what that does to the economy. The government is making up more and more of the economy. It's employing more people and it's spending mass amounts of money. But that money is coming from IOUs that the taxpayers have to pay. When you increase the money supply, you have more dollars that are chasing goods and services. That makes inflation go up. Okay, outside inflation though, we're still not describing how it affects you. Yes, inflation affects you, I understand, but it's more than that. It affects you because the government sets basically the borrowing benchmark. The more that they need to borrow, the higher interest rates may have to go because there may not be as many borrowers, too much supply. So the benchmark for lending rises. This benchmark rises for the private sector because banks have to lend off what they're getting. They can't lend even though they have to pay a certain price lower or they won't be profitable. So when the banks go to lend money, they're lending off the benchmark. That means car loans. That means housing. That means credit cards. You're talking about all kinds of debt, starting a business. It has an effect that is called crowding out. This means when the government is borrowing heavily, it is crowding out the private sector. Why? It's competing for the same money. So investors say, I'm going to invest in the government, and that's where I'm going to put my money. Where if they didn't have that, they would invest where? In other things, in the private sector. So it is a literal shift of money. And the government is crowding out the private sector because it's trying to attract that capital. This means that businesses have to pay higher interest rates. You have to pay higher interest rates on your car, on your house, and other things like credit cards. This means that you have inflation. This also means we are crowded out and you have the government competing with the private sector, like businesses that need money. All of this affects you every single day. The effect of this becomes more and more that the economy is no longer the private sector. It is not going to jobs. It is not going to private sector businesses, everything else. The economy is being driven and consumed by the government, both in terms of capital being injected, competition for investment, as well as people, personnel, and competition in the labor market because it is so large. And this is how we result in a tale of two cities or two different worlds. Basically, you have government economics and then you have Main Street or all of our economics. But this is the tail wagging the dog. Its impacts are profound and lasting, and not just because we're taking debt that our children will someday have to pay. Meaning it is affecting you every single day. Most people just don't know how. So at this point, the government is trying to balance two things. It wants the economy to grow. It wants people to get paid more. It wants the cost of debt to get lower. Not because it loves you, but instead because it feeds the beast. They need to tax more, and inflation reduces the total debt amounts. But the United States has problems when it borrows, such as the cost to pay it back. That grows astronomically, which we're at a highest point of our total capital being used to just simply pay on interest for the debt. Now that capital that taxpayers are paying, it can't go to the things that we need. That means we have to pay more to get less. The money goes to debt, yet we are stuck with all of the consequences. The product goes down, both in terms of its economic effect and also the administrative nightmare, which is a massive government. This is probably the most important issue to voters, even though when you pool the United States, it's not. And the reason is they do not understand it. In fact, I would argue that most of the politicians do not understand what I just explained. This is not taught in schools, and the government is very much interested in keeping itself alive. So what do you do? First of all, there's a few things that you need to understand. Once again, where inflation comes from, what that means. Also, that the government is actively driving down the purchasing power of our money. That's why savers are losers and investors are winners. Why? As your money gets worth less, people put those into assets and those go up. We live in an economy today where you just can't save money and then in 20, 30 years, you have that money to spend into retirement. If it's not invested, it will be all but gone. So it's important that you're planning ahead for the future, that you understand what large government, massive expenditures, and spending is doing and how you can manage your money accordingly. It's also important that you understand when you go to vote and when you talk to elected officials, that what are they going to do? They talk about spending money to boost the economy. But just by the fact that they're spending money to boost the economy, they're not only replacing it, they're competing with it. If you really want to solve this problem, make sure you are talking to other people about it. In fact, share this video as well as comment below. This is complex. There's a lot of things going on, and we hit on the fundamentals. We're making more videos, and I love teaching about this stuff, so let me know what you think and what you want to hear more of.